Hello, traders. FX Pip Collector here. Today is Thursday, February 27th, and this is my morning video where we like to cover the US dollar pairs, including gold, and a couple of the JPY pairs. If you haven't done so already, definitely check out my free trading community on Discord, linked at the end of this video down here in the corner. Also, don't forget to check out my website, fxpipcollector.com. Get you access to all the benefits listed down here below and more. So, anyways, first thing first, I always like to look at the US, not the US, but the news calendar to see what we potentially have for news coming out. We had a little bit of Swiss news just recently. We had a little bit of Spanish CPI news. Very slow week this week for the dollar. We got unemployment claims and primary GDP this afternoon. Hopefully that will do something. And then we also have durable goods and regular durable goods. So possibly some moves on the dollar pairs this afternoon. We also got the G20 meetings continuing, and we have CPI for Japan tonight, so the yen pairs. So we finally have a little bit of news on the calendar for the dollar at least. Overall, it's been extremely slow this week. This is the daily time frame, and just look at the 5 days in a row of no bright price action whatsoever. Very slow. Same thing, if you've been watching my videos, the same thing applies. If it goes up and breaks structure, then I think it's a wave C, and I think it will likely go up and make a new high. If it doesn't go up and break structure, but makes a lower high, goes down and blows out these fib levels, then that's what's going to prove to me on the weekly time frame that we really are going to go down for a big old giant wave C. And if we are really in a big old giant wave C to the downside, that's extremely important information on all the dollar pairs. Because if the dollar goes down, all the dollar pairs would go up. So, anyways, let's start off on the euro dollar. Euro dollar has been bouncing around pretty much all week, but we definitely do not have a breaker structure to the downside, so we definitely cannot say that the trend is down. We have been bouncing ahead off that 100% Fibonacci extension, which if this really was like an ABC, not a 1, 2, 3, then I would expect it to actually turn there. But I'm definitely watching the US dollar index for confirmation. That's what's going to tell me whether or not this is a wave C, whether or not it's going down, or whether it's really a wave 3 and it's just going to keep on trending up. So definitely still watching the dollar index for confirmation on all the dollar pairs. So because of that, I'm definitely still bullish. I'm definitely still recommending looking for shorts. I mean, it's been very sideways this week, but I mean, if you did, I mean, I'm recommending looking for longs, that is, I'm sorry. But if you were looking for longs pretty much all week long, you definitely had some pretty decent trades. Now, this is extremely sideways, but I mean, it looks like it pulsed it down. It looks like corrective up. Potentially, this right here, the spike was the A, B, C, or B. And then potentially, this move down could be the wave C. We do have a nice little fib bounce. We got a little bit of a lower high, a little bit of a higher high. Hopefully, it's like a contracting ABC correction. Hopefully, this makes another good impulsive move up today. It would be really nice to see it break this 100% Fibonacci extension with momentum to help prove that we're really in a wave 3 and we're actually not in a wave C anymore. So definitely recommending longs still on all the dollar pairs. Pound dollar. The good thing about the pound dollar is that it already did go beyond the 100%. But a wave C definitely can go to the 123 or the 138. So that's definitely not telling us that it's not a wave C. To me, it looks more like a 123. It looks more like something that will end up continuing up and probably look at something like that over the course of the next couple weeks. So unless the dollar index tells me otherwise, I'm definitely still very bullish on the pound dollar. Pound dollar, we got a little bit of a 1, 2, 3 way pullback. We got a 78% fib bounce. Looks like we might have another impulsive move to the upside starting. I mean, like I was saying with the euro dollar, if you've been looking for longs this week, you probably had some pretty decent little long opportunities. There's definitely been plenty of opportunities to go long over the last couple of weeks. Just kind of slow going, kind of, in and out trading. Get in, get out, maybe 4, 5, 6, 8 hours later. Hopefully, this right here is another end of a correction, and hopefully it just keeps on going up. Either way, I definitely am still recommending longs on basically all the dollar pairs. Moving on to the Aussie dollar. The Aussie dollar is a little different than the other dollar pairs. The Aussie dollar definitely did break structure to the downside. Now, that could possibly just be like an expanding ABC correction, like this is the expanding ABC, and this is like a 1 of 3, 2 of 3, and it goes up and makes a 3 of 3. And it all relies on the dollar index for me. If the dollar index breaks up, then I would expect this to keep going down. If the dollar index doesn't break up, I would expect this to eventually probably bounce from one of these fib levels and continue the uptrend. Going down to the 1 hour time frame, like I said yesterday, I do still expect this move down, possibly as part of a crescent to the uptrend, and I still think there's a good chance it will go up. But like I said yesterday, if it doesn't break structure on these sort of time frames, then I would actually still recommend looking for shorts on these sort of time frames. And as you can see, it definitely has not been able to break structure. I mean, every single one of these little swings right here is a lower high, lower high, lower high, lower high. So as long as it continues this low high series on this 1 hour time frame, I would definitely recommend shorts. Just keep in mind that if it does break up with momentum, then you probably should start looking for longs at the end of pullbacks that come after the breakup. But until that happens, or if it even does happen, I would actually start continue to look for shorts in a downtrend. So moving on to the Kiwi dollar. Kiwi dollar is exactly the same as the Aussie dollar. Literally exactly the same. That's why I don't really cover it. I will trade it, but I don't really cover it because it is literally the same exact analysis. US dollar CAD. I'm still expecting that there's a good chance this is going to start a big downtrend, and we may even already be in the very early stages of this huge downtrend. But we have to be a little bit careful because the US dollar CAD does just keep on drifting up. I was kind of wondering if this was actually like impulsive down wave one and this was like a one, two, three, almost like a running ABC of wave two. So definitely still keeping an eye out for sorts. But really, we should be looking for a break of sorts on like the 1 hour time frame range before we go short, because otherwise we might get trapped in a couple shorts, kind of like what happened yesterday with that big impulsive move down. Yesterday we had a big impulsive move down one of the Trump speeches, but it was definitely ended up being a bear trap because it just went back up. Which in hindsight you can definitely see that it was probably a one, two, three, four, five. Now if the US dollar CAD goes down and breaks structure, I would definitely at that point be looking for shorts heavily. If it doesn't do that, but instead it just goes down, makes a higher low, and keeps going up, then definitely I would recommend longs if you do trade these short time frames. So if you are trading these short time frames, I would recommend longs because it is definitely continuing to make higher highs, higher lows on these sort of time frames. If it breaks that high low series with a nice break of structure, then at that point I would for sure be looking for shorts again. So, anyways, yeah, let's go back up to the daily time frame. US dollar Swiss. Dollar Swiss is definitely a little bit of a different pattern, but I still think this looks like a possible wave one. This is like an ABC of two, and then I still think there's a good chance we're in a wave three, and I think there's a good chance this is going to go down to about these lows before we see too much of a big pullback. So definitely still bearish, but it still really relies on this US dollar index. If the dollar index breaks up, then I would definitely become a buyer on this. If the dollar index doesn't break up, then I would definitely continue to look for shorts on this. So going down to the 1 hour time frame, this right here, eh, I was kind of looking at this morning and saying, oh, this could be an ABC pattern, but it's actually a little bit more of a five-way pattern, isn't it? So that means that this actually could be the wave A right here. This could be like the wave B, and maybe this is the wave C. We're not at a Fibonacci level, but if we do get a Fib bounce, if we do get a break of structure to the downside, I would definitely continue to look for shorts. I personally am definitely still looking for shorts unless the US dollar index breaks up. So definitely still on the short side. Definitely still looking for shorts at the end of any pullbacks I see. Hopefully for the continuation of this downtrend. So moving on to gold. Now, gold is pushing down pretty hard, and there is definitely a chance that this move up right here is the wave five, and that the trend is over, that it goes down, breaks structure, and makes a wave four from the higher time frames. If you go all the way up to like the monthly time frame, you can see that we're definitely in a one, two, three. Eventually, we're gonna have to make a big pullback for wave four, which I think will go down to probably about $2,500. So definitely a big pullback. But we haven't broken structure to the downside yet, and I still think there's a chance this could turn into be like a ending diagonal wave five, but it might just end up being a one, two, three, four, five, and this high right here is the wave five. So if it does go down, if it does break structure, then I would definitely become a seller looking for pullbacks in an ABC of wave four. Going down to the 1 hour time frame, gold definitely does like the 88% Fibonacci retracement. So if you do get a bounce from that level, then I would still say that this could be an ABC correction, and I would definitely still try to go long again. Yesterday, gold played out pretty much exactly as we planned. Yesterday in my morning video, I said that gold will probably go down, test at 78%, and then push up. Now, instead of continuing the uptrend, what happened is it made like a running correction, like a lower low there and a little bit of a higher high there, like a contracting. So it ended up pushing down again. But the same thing applies. If it respects this 88%, turns back up, I would go long again, and it might just end up continuing the uptrend. On the same hand, if it actually just keeps pushing down and goes down and breaks this structure, I would have to say that the wave 5 is over on the daily. The wave 3 of wave 5 is over on the daily, and it probably should be in a big wave 4, potentially, eventually making it all the way down to about $2,500. So moving on to the dollar yen. All the yen pairs have been pretty sideways this week too, but I mean for now I'm definitely still bearish. I do have an alternative count on the yen pairs that does have it going up, but so far it hasn't proven that to be true. So I'm sticking to my original count until they do prove it to be true, which is going down in a big old giant wave C. So definitely still pretty bearish on that. Going down to the 1 hour time frame, the dollar yen and all the yen pairs have been pretty sideways this week so far. All the yen and the dollar pairs really have been pretty sideways so far this week. I mean, if you was continuing to look for sorts, and there's definitely been some pretty nice sorting opportunities, which I definitely would still recommend looking for sorts. So I personally am looking for 1, 2, 3 way pullbacks to go sort for the continuation of the downtrend. So in a ways, definitely still recommending shorts on the yen pairs. Moving up to the euro again. Euro again, same type of thing. I mean, we are at a fib level. We do have a little bit of like a triple, quadruple bottom right here, like 1, 2, 3, 4, maybe even 5 bottoms. Definitely an area of resistance for sure. But until the JPY basket, proves that the yen pairs have turned back up, which I do have a bullish count on the yen pairs. But until they actually prove they're going back up, I'm definitely still looking at this as potentially a downtrend that potentially will keep going. So unless the market actually turns, preferably the JPY basket, then I am definitely still very bearish. We have to be careful assuming that the yen pairs are going to make a big move up because they definitely don't have to. We could be in a downtrend wave C on the weekly time frame, and it will definitely continue the downtrend if that is the case. So very sideways price action. I personally would want to see a decent pullback in order to go short. I would want to see like a 3 way pullback to go short. But on the other hand, if you're watching the JPY basket really closely and you see the JPY basket break structure to the downside on roughly the 4 hour time frame, then that definitely would cause me to not look for shorts anymore, but to switch it up and start looking for longs again. For now, I'm definitely on shorts all the way. Moving on to the pound yen. So if I was going to try to go long a yen pair, it probably would be the pound yen because the pound is quite a bit stronger than most of the other yen pairs. But if you zoom out on the pound yen, I still have the same analysis on this. I still think there's a good chance we're going down in a big old wave C of wave 4, which I think we're still going to end up looking something like that. So definitely still very bearish for sure. Now, if the JPY basket tells me otherwise, I have no trouble looking for longs, but the JPY basket definitely hasn't given me a breaker structure to the downside, so I'm definitely still bearish on all the yen pairs. The yen pairs have been pretty painfully sideways, but honestly, if you were looking for shorts, there's definitely been some pretty nice shorts this week over the last 5 days or so. Definitely still looking for shorts. I mean, there's zero proof whatsoever that it's going up right now. So if it does go up and then down, then I definitely would still recommend looking for shorts. On the other hand, if the JPY basket does decide to break structure to the downside, I would definitely stop looking for shorts and I would start looking for longs again. But as of right now, I am definitely recommending shorts on all the yen pairs, and I'm definitely recommending long on the dollar pairs or short on the dollar itself. So, anyways, definitely don't forget to join my free Discord channel linked in the corner. And as always, thank you for watching and happy trading.